The S&P 500 hit our long-term target of 7,680 today, and it may not be done. Today, we'll look at how we got here, what it means for right now, and the two higher targets in play. At the end, we're going to look at one specific industry group that has been coming back that we need to pay attention to. So here on Tuesday, August 4th, the S&P 500 hit 7,680, which of course was the bullish flag target that we had in place since it was first triggered on April 24th. Now, we've talked about this basically in every video ever since that day. And again, it sounds easy enough now to see how this happened, but when it originally was triggered, not a lot of people believed it could happen. And of course, anytime you have a bullish breakout or bearish for that matter, it's tentative at first, right? Because we just don't know if there's going to be a necessary or immediate follow through. And without follow through, those breakouts aren't clean. And messy breakouts don't really work out as well as clean versions do. And so initially, it was kind of iffy, right? First few days kind of spent right near that breakout zone. But then as April ended and May began, we finally got that extension. And again, we've talked about this a lot, but the most important thing is creating a cushion or an area where it can pull back from, kind of trade around, work off some of those overbought conditions, and eventually get to that target. But at the same time, give the market some time to breathe along the way to eventually avert some of this rolling over like activity that we saw over and over again over the last few months. And so again, it hasn't been easy getting there because there are some fake outs along the way. Just recently, we had talked about how there was a smaller bullish pattern here in play, got the breakout, but got no follow through. So this was a chart from last week, but we can see how just because it pulled back, never give it a chance to extend and undercut the right shoulder, that's the way we look at something being negated. Or again, if this was a real chart trade idea that we look at every day for our clients, it would have been stopped out. And so even though, again, we know the market is up here now, this is not successful. We have to respect that. But we continue to see the market hanging on. So that meant more potential bullish patterns than could take shape. So this is just one version of the potential patterns that we have been tracking. This was in place the day before the Fed came out last week. So it looked a little different after that. And it looked very different all along the way, right? We first talked about how any part of this June decline could eventually be bought and be beginning stages of an eventual bullish pattern to get us back to new highs and again, provide a lot more upside potential if that were to occur. And so with the comeback over the last 2 days, of course, now we do have this bullish pattern being triggered, right? In fact, we have a new live bullish pattern in play as of Tuesday. And that means we have a new upside target as well. And it's 7,925. And this is what it looks like. Remember, we're talking about what the S&P appeared at last Tuesday right here. This was Wednesday, the reaction to the Fed. And then from that point, 4 days straight up, with 3 of them now being 1% gains, right? A cluster of face-ripping rally activity, which of course was a key missing ingredient up to this point. And we can see how this slingshot has gotten us now above 7,700 and on its way to 7,925. But again, that wouldn't have been possible without first bullish patterns here being triggered. We remember this one, at the very beginning stages, but we're even showing a shorter term version. But again, that helping us get up to here, had the first pause in the form of that bullish flag pattern, and then that having seen the extension from that point, giving the market the ability to form something much like this, then take advantage of. And this is exactly the type of blueprint that we had anticipated, or at least hoped for back here, and also did mention at the time that it may take a few months, and maybe August will be the time where this is occurring. Well, here we are, of course. And so again, we've also seen now failed bearish patterns to get there. So when you have an uptrending market, extremely easy concept to grasp, but sometimes difficult to see play out, is we have consolidation zones that are just not resolved lower, gives us the ability to have these bullish formations leveraged and have those upside targets hit. And so just in the last week and a half, 2 hour time frame, we showed this last time, we had that marginal break And so it didn't really seem too concerning, but at the same time, without the S&P giving any indication that it wanted to really rally, right? There was no interested buyers at any higher levels. This was in play actually through the Fed meeting, right? Because we didn't really get any sort of two-way volatility after that. Remember, the last 2 hours were basically straight down. And so with that, we also saw, right, this other bearish pattern of the symmetrical triangle get triggered as well. Again, this was Wednesday of last week, Fed day, and from that point, just ripped higher. So as we can tell, both of these now have been negated. And so every morning in the CappThesis opening look daily note, one of the key things we profile is this pattern grid showing exactly where we are. So this morning, this is what that pattern grid looked like for the S&P 500, where we had two live bullish patterns, right, in play. The one that was just triggered with a 79.25 target, and then the one that has been in play, the bullish flag pattern, again, since April 24th, started the day 1% away from that target. We know it's been achieved. At the same time, come in with two freshly negated bearish patterns. So one client recently asked me, if there's one thing for me to focus on in your note, what would it be? So I took a second and said, it may surprise you, but it's actually the pattern grid, because it can tell you that if you continue to see bullish patterns in play more often than not, and no live bearish patterns are ones that continue to get negated, what does it tell you? The market's moving higher, and we can trust breakouts, whether that's from an index level or individual chart trade level. And so today, with the big move to new highs, actually a third bullish formation was triggered as well. And that was a trading box breakout. And when we're talking about this along the way, remember, the large and extended trading box looked more like a rectangle, just wasn't leveraged to the upside. But one of the things we did mention in the last video was that one key difference recently is that most of the price action was taking place in the upper half of it. So it seemed like we were getting closer, and of course now rallying through it. So zooming in, we can see that a new, even higher price target was triggered. Again, this is a simple measure move of the entire range. This is the high, and this is the low, and eventually getting back up there, we have a target slightly above 8,000. So like with every bullish pattern breakout, tentative, right, until proven otherwise, meaning that so far we're getting a pretty good advance. Obviously, we'll see if we can get some follow through over the next few days. So if you're enjoying this content, again, check out our free Cap Notes newsletter on Substack. Today, the article that we shared was S&P 500 7680s target hit. Went into more detail about what this means, how we got there. And again, check out the 5 best charts for last week. At the end of that, we talked about another chart trade that hit its target from a bullish pattern just like this and how that was managed along the way. Again, it's capnotes.substack.com. Look forward to seeing you there. Okay, let's talk about that weekly MACD sell signal that we discussed last week. Needless to say, it did not play out. And that is very helpful information because remember, all of these red lines along the way were MACD sell signals, again, on this weekly chart. And the ones that were thinner here indicated the times when those did not work out, meaning that the market continued to rally after a brief pullback, and it just told us that obviously we will continue to be in a strong uptrend, where the thicker lines did a very good job of marking key trading tops, right? 3 prior times going back to 2021. And so far, again, with no downside follow through now, a very strong 4-day move, we can obviously say that this one did not play out as well, giving us, again, information telling us the market continues to be strong along with momentum. So from a short-term perspective, we can see exactly how strong this burst of buying was. Again, this is taking place about 2 hours before the close on Tuesday, August 4th, and the advance is about 6.1%, again, from the very low point, or basically the closing low on Wednesday, June 29th, the last Fed day. And so all along the way, we're voicing our concern, or at least displeasure, about the fact that the momentum just wasn't there, right? We're talking about the 14-period RSI on the 2-hour chart, which doesn't take much, right, to swing this from overbought to oversold territory most of the time, but it spent almost 2 months worth below overbought territory. So all of these intermittent rallies here, as the S&P got relatively close to 7,600, just couldn't get that momentum to push it to new all-time highs. And so as we're talking about, we use this, again, to give us a very good and early indication of how momentum is doing. And if that RSI cannot get to overbought territory and also the S&P can't get back to new highs, it just tells us that we shouldn't trust any of these rallies. So of course that's changed now over the last 4 days, with this 6.1% advance being considerably more than anything we've seen going all the way back to April. And in fact, now we not only got to overbought territory here, the RSI got to nearly 80, right? Very big number, which was something that we last saw again during this huge run in April. So out of nowhere. And we can see how this compared to what happened before that, from October 2025 all the way through March. There was another time where we're comparing this time to where we just couldn't get that momentum going. And if we continue to see failed marginal breakouts, that eventually that momentum could have come back and rolled over. Of course, that was not the case this time. So going forward, what do we want to see here? We want to see, obviously this is going to come off at some point, but see it oscillate above oversold territory, potentially have this potentially come back down again. Again, it's a very strong 4-day move, but then find some support from a higher level. Okay, so let's switch gears, move away from the S&P 500 and look at one specific industry group. And that is the IHI Medical Devices ETF. And this one really hasn't been on people's radar screen only because it's taken so much time to come back, right? It's been out of favor for a while. So many other areas, especially within growth, have done so much better. Not just technology, but other spots as well that are all making, so many of them are either making new all-time highs now, very close to doing so. And obviously IHI is not one of them, but it is a comeback story that we should pay attention to. And so it started with looking at these failed MACD buy signals, which we were talking about a lot at CappThesis at the beginning of the year. And we saw as this was really selling off, just as the year began, there were times when we saw some rallying efforts, right? To the point where we're getting clear MACD buy signals. So again, when you get a MACD buy signal in a downtrend, you just have to be careful because it doesn't tell us anything more other than maybe there is some dip buying going on. There's some mean reverting move type trades potentially taking place in a very clear downtrend. Without these rallies doing anything to push back above these downtrend lines, there's nothing really to do, right? Then we have to be cognizant of it. And again, this is why we always talk about how just buying a low price doesn't mean much until you see a turn. So we would rather look for a better entry, meaning see some accumulation evidence first. And so as we're continuing to look at this last one here in May, we notice, okay, well, things have really gotten oversold because, the rate of change as identified by these downtrend lines were getting steeper and steeper. So one of the first things we look for is, not only a MACD buy signal, but a break of a trend line that can, at the very least, that can get us started. So that is what happened initially in May. And then we saw the uptrend or downtrend line from March to June also get eclipsed here. And then, of course, the longer term one finally, right, saw some action coming forth where the market was getting back above that as well. And so all along the way, we also could see what? Higher lows start to develop too, to the point where bullish patterns started to emerge. Even in IHI, again, not many people saw this because of so much else going on, but even though it was a jagged breakout, finally got back above that zone, producing a upside target of near 55. As we can see here on the bottom here, RSI, which was pinned below the midpoint on the 50 midpoint on the scale, started to push back above it at the same time as the 20-day moving average started to rally, right? Overtaking the 50-day. Both of them started to curl higher at the same time. So things are starting to really change. Pattern work, momentum, moving averages, so forth and so on. We're finally getting close to achieving that target. And again, we talk about this a lot. we focus on the very short term first because if you get an indication of things changing, they also can lead to bigger formations if they play out. That's exactly what happened. And yesterday got a breakout from a much bigger, much more clear cup and handle pattern, right? Which encompassed all of the price action going back to April. Finally got the breakout. And this gives us an upside target of 59. That would bring us all the way back to where we were in February and March. And of course, it can be even bigger versions as well as things continue. And so we have an eye on this one too. If we eventually get back to 55, maybe we pause for a bit there, digest some of this move. And this could then turn into the right shoulder, right? Maybe through August at some point, and then have a multi-month, right? Probably up to 6 months worth of a inverse head and shoulders pattern at that point. And that's when investors probably will really take notice, talking about a massive base. But again, all started around here. Finally taking advantage of a MACD buy signal, seeing things change under the surface. And again, one other clear indication of how things were changing is that we've had bursts of buying recently too, right? Just had a 4-day rate of change recently of at least 6% early in July. And again, that had not happened since earlier this year. And we go all the way back to 2022, only a handful of times. And the important thing is that most of those times we saw additional upside follow through. And of course, when it occurred at the 2023 low, it was the very beginning stages of a very strong run. And even in 2025, even though we didn't have a huge run, it still wasn't a time to sell. And so now with this coming again, after a huge downturn, finally seeing bursts of buying, maybe there's some short coverage, maybe that's real buying, whatever it is different. It's a positive change of character that possibly could give us an additional upside as well. And so we also have long-term support. It was difficult to see it here, but if we look at this from a monthly point of view, again, going all the way back to 2021, when this really consistent uptrend finally gave way, even though IHI hasn't done anything, it's been able to hold near this zone before, right? The mid 40s. So we have this going on, right? To give us some support, some sort of backbone to the rally, seeing some of these shorter term momentum and patterns start to work in IHI's favor. And so the final piece is that this is all occurring as we're starting to see relative strength versus XLV. Now we know the XLV Healthcare ETF has been doing great, breaking out to new all-time highs already after a big comeback last year. But we haven't seen so far is IHI really participate in that. We can see how distinct, almost a crash with IHI versus XLV here, with now it finally coming out of oversold territory. So we can see how IHI could be coming back both on an absolute and relative basis. So we have the S&P 500 and new all-time highs, finally hit an upside target with 2 others with us. And now another area IHI to focus on. It's not making new all-time highs yet, but it's becoming potentially one to focus on going forward if it can continue to leverage those smaller bullish patterns. So that's what we have for today. Check out the other videos on this site, and I'll talk to you again soon. Thank you.